Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, it looks like Spirit Airlines has a new CEO to kick off the new year, 2016. Tracey, Ryniec, and Dave Bartosiak are here to weigh in on this, pick it all apart, tell us what it means to the company. And company picture hasn't been too snappy in the recent past here. Tracey, we're talking about Ben Baldanza. He had been their CEO for 9 years, had led the industry push for more airline fees, among other of his attributes.
That's right.
Just how much of a surprise was this move to the street?
Well, it was a real surprise because I saw the headline and I was like, what? He's out? Because he is so big in the industry, because he was the first one to really push the, luggage fees and the fees for basically everything, and to turn around a low-cost airline and say, this is a new way of pricing. Mm-hmm. And it seemed to work for all those years. So it was, I felt, kind of shocking for him to suddenly be on the out.
Okay. So one issue for the airline in the past year has been number of available seats had grown, revenue hadn't been keeping up, carrier had continued to miss analyst financial estimates. So is this just like the net effect of all of this?
Well, kind of. Yes. I really like Spirit Airlines over the last couple of years because of all these changes that they were able to make, and they have growth. They were growing into the Caribbean and Central America. They were going on some routes other people weren't on. Then the fuel prices came down. Everything's so great for all the airlines until they started increasing capacity. Mm-hmm. So there are price wars and things going on, and you think the airlines won't do it every time the fuel prices go down, but they do. They start cutting ticket prices to the bare bones, and it causes issues, and that is what's happened in some of the markets like Dallas and Chicago, super competitive. Mm-hmm. So you're getting issues with their margins. They did have to lower guidance the last couple quarters. That's been hitting them. And then you can see on the actual earnings look good this year, up 25%, and then next year falling a little bit. It's not awful, but you have falling earnings growth here, and that's not what you want to see. So it was all of these factors coming into play, and then apparently the rumors out there, these are unconfirmed, that they might be interested in some kind of merger, possibly with Frontiers, with the rumors, right. And that this is just kind of a strategy. He leaves, they bring in the new CEO who was at AirTran, as you said. Mm-hmm. AirTran was acquired by Southwest a couple of years ago, so he's familiar with what to do when airlines merge and all of that. Mm-hmm. And he was already on the board. So it was a good replacement, and it seems like this maybe was the plan after all.
All right, Dave, let's bring you in here with the other part of the picture. Spirit shares were cut in half in the past year. However, when this news hit the wires on January the 5th, Tuesday, we're here on January the 6th, Wednesday, talking about this. Right. After the news got out, Spirit stock climbed 5.9% to close out the day at $41.50 a share. That was the biggest gain in 2 months.
Right.
Apparently, this is good news for the stock.
Or everybody covered their shorts, right?
Yeah.
I think that's more of what it was, more of a short covering rally. Because if you take a look at the stock chart, this thing had been beat up all year, pretty much straight down. At my desk, I was looking over a couple-year period. So, you look at a stock like this and, why is the CEO gone? Well, probably because of this, right? Mm-hmm. You got to do something to turn these shares around. It is shareholders, after all, that are on that board. So they expect to see you perform. And then now when you got the growth numbers where they are, it's not really a recipe for success. So I think that was just a little bit of a short covering rally here early on. I've seen this kind of pattern over and over again where, it bounces and then it'll consolidate for a little bit. People get a little bit hopeful. But when a transition happens like this, I really do think that the big shorts just kind of get out of the way, they take their profits, and then now they're looking, okay, is this new guy going to do something groundbreaking that's going to change anything, or is it going to be the same old airline? And if it's going to be the same old airline, then they'll probably re-enter their shorts.
And we all know it's important to have your shorts covered.
Yeah, and
every situation.
Absolutely. And what I was wondering is, this is the CEO that nickel and dimes everybody, right?
That's right.
Yeah.
Do they have pay toilets in the employee bathrooms at Spirit Airlines?
It's a good question.
I don't think so.
You may want to
know.
check that out for us.
That-
In the meantime, what do you think about the new guy? Is he the one who's going to right the ship here?
I really don't have an opinion on the new guy.
He
right
did
now.
run AirTran for about 4 years,
Yeah.
and that was a low-cost budget airline. And they are in actually some of the similar markets as Spirit down in the Caribbean and Central America as well, which Southwest now has. So he's familiar with the areas where they can grow, but he's not going in there to make waves. He's not going to go in there and really reshuffle things. So to me, it does seem like he's more of a placeholder for right now.
Okay, well, we're going to let that merger grist mill keep on churning. We'll see where this all goes. Thank you both for that. In the meantime, if you want other stock information, always remember you can go to Zacks.com. There you'll see a lot of interesting articles, commentary, stock picks, and stock picking strategies. Link to it all right off the home page. With Tracey and Dave, I'm Terry Ruffalo.